Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 31st, 2017. In this video, I want to keep it relatively brief. I want to share a very compelling trade idea that stands out. In fact, I'm doing this video, jumping over to the trading room now. Earlier today, Green Dude 77, member Green Dude 77 posted that IHI came up on a stock fetcher scan as a possible short. Negative divergence is happening on daily chart, question mark, and my reply was yes, that I think it's a great setup. In fact, I'm going to go over the charts here on IHI, and after that, after I do this video, I will, and I've started to do this, I should back up. I've started to go through the individual components. However, there's quite a bit. If you look at the related items, I move this list over. You can see down on the bottom, there's 54 components here within IHI. These are all the components. So I will go through each and every one, and as I did last time, pick out my favorites. Now, what am I referring to? You can see this chart. This looks like deja vu to me. Back in 2016, I pointed out, in fact, it was such a compelling sector at the time that when I see something that really stands out, I'll do a video on it. If something looks okay, or there's one stock or one ETF, I'll maybe put up a quick post with a static chart. IHI, back then I had pointed out we had a well-defined uptrend line. This, in fact, a price channel. If you take these two parallel uptrend lines, that's a price channel. Then we had a divergent high. You can see really double negative divergence. We had divergence at this point. Prices started to flatten out, made a slightly higher high. That was still a divergent high, kept those divergences intact. And actually, that should be to that point. And then we had a correction. And not only did we correct, but is so often the case, my final target was hit. That was the end of the run down there. IHI reversed. That the correction was over. And keep in mind, I sometimes get some comments in the trading room or via the comment form, we're in a bull market. Yeah, the primary trend in the stock market is up undoubtedly, but there are always opportunities, long or short, in any sector, industry. Give me a bear market, a downtrend, and I'll find some attractive long side ops, whether they're counter trend rallies or sectors, commodities that are doing well when everything else is falling. And just as we were in a bull market here and have been, this sector, as now every bit as back then, if not more, stands out as a very attractive shorting op. So you can see that played out. Divergent high, we have the same thing, a rising price channel with consecutive divergences, double negative divergence here at the top. Looks like we're just starting to crack under that trend line. I can tighten that up a bit to capture all these reactions back here. So here's a sector breaking down with a lot of promises, and this will probably be an official trade idea, and I'll give you targets when I do the update on this and add it as a front page post. All right, let's make this quick before we dive into the charts of a couple of these components, and I'll give you a few more notes on IHI. Let's do one tip on the site. Let's go back to the site and let's go to the home page here. This is the home page, the right side of the chart. There's a couple ways to look up analysis on a stock, an ETF, a sector, industry, commodity, you name it. You can use a search function up top, and that will do a good job of calling up, posts, and it'll include trading room posts and things such as that. However, front page posts, I use a tagging system. You'll notice at the bottom of each post on the front page, you have tags. Those tags are ticker symbols for a stock or an index, commodity, anything else. So if you hit this drop down box, I'm going to click on it and then quickly type in IHI. If you do it quick, it jumps down to it. You see at the bottom there in blue. If you do it slow, sometimes it's going to start pulling up the first I. Just type it in relatively quick and then hit enter. And then what that'll do is call up all posts that were tagged with IHI. So now we're on the front page. We scroll down here and we can see I've started covering that. The first time I ever posted about it was back in October of 2016, where we had just before the correction on that chart I just showed you on IHI, and we'll jump back to that. So feel free, if you have the time, I would encourage you to take a look at this video back then from October 18th. I covered several trade ideas. You can see them in the tags down here. So these were all the stocks that I discussed. And then let's just take a quick look. On October 25th, a week later, I did a follow-up post, IHI Medical Sector Device Update. And here's where we were at. This was a week later. We had the breakdown, and then we had this flagging action and consolidation. You can see on the chart there. Here, I'll make it a little bit bigger for you. And those are my two price targets. So again, you see price targets on the chart. This isn't hindsight analysis. This is foresight. Where a security is going to head. And again, you can see this is back in October, and that's exactly where we went. We hit that target almost to the penny and then reversed. Take another look at a couple of the other charts on here. There were a few others covered. This was EW, Edward Life Science. And again, these were, as the post said, some of the standout trading ops that I saw in the sector at the time. So you can see this, just a beautiful bearish rising wedge pattern confirmed with negative divergences. And as I said, this was one of the more promising short setups that I covered in last week's video. I showed you, two targets all the way down here to this level. You can see that reaction right there, that reaction low from June. And let's just take a look at what happened there. So there's EW. We gapped down, big gap down, bypassed T1. So I made a note. Your first target would have been filled at the open there. When you short a stock, just as if you're long, if you have a in the case of a short, you have a buy to cover limit order at your target. That's what you should have. So if you had a buy to cover order, it would have been bypassed at the open and then bypassed on the gap and filled at the open, because buy to cover limit orders on a short trade will fill at your limit price or better, just as you flip it around in reverse. If you're long a stock, let's say at 100 and your target was 120, and you have a target to sell limit at 120, and that stock gaps up to 130, it will fill you at 130. So you will always be filled on the limit order at or better than, in your favor, better than your limit price. And in this case, we went on the next day and went down and hit T2. And this one actually had more downside from there. Again, not all of them reversed there, but that's just at that point where I thought the risk to reward wasn't very attractive. And so that one played out nicely. Let's go back to the site, look at the next one down, ZBH. Again, these were just a handful. I'm only going to go over a few that stood out and that stand out now. The CBH is starting to move crack below that uptrend line. So that was your breakdown right there, and appears to be headed to at least that 122.66 area. And I listed a total of 3 targets. Fast forward to today, CBH. That was back then. And as noted here, I mean, these were just... And this is what I try to impress so often, is why I love shorting stocks when you have a very clear breakdown, because the gains on the short side, for the most part, not everything is 100%. You can see stocks really jump up at times, but for the most part, stocks fall a lot faster than they rise, and you can make very, very profitable gains in short order. In fact, this stock dropped in, what is that, 2 weeks, maybe about 24%. I don't see anywhere on the chart where the stock went up nearly that much in just a couple weeks. So you can see there, my first target was hit the following day. Then 2 days later, the stock gapped down below my final target, where you would have been filled down here had you had a buy to cover limit order at 115.82. Again, since the stock gapped, if you shorted on that breakdown, you would have been filled here, and that would have been a 15% gain in just a few days. Okay. That's all great and good. Hindsight's 2020. Again, not hindsight's 2020. I'm sorry. That was actually forecasted back then. Correction on my part. But here we've come full circle. This stock is working its way up in a rising wedge pattern and has just recently broken down, and it has done so impulsively. That's one of the criteria you want to see for a breakdown. You want to see impulsive selling, price action, increase in volume. We had divergent high there. You can see negative divergence from this peak to this peak here, and that's a pretty well-defined uptrend line. So this stock, in my opinion, has more downside to go. And again, I will comb through the list of the components and put up my favorite individuals, stocks within the medical device sector. But if you want to get a start right now, or your preference is to short or go long ETFs, IHI by all means appears to offer a pretty attractive risk reward right now on the short side, and some promising downside potential in the coming weeks to months. Okay, a couple more, and we'll get back to IHI, and I'll make any other additional notes. This again is all in the same post from October 25th, a week after pointing out the sector as being bearish. Here was another one that was offering a very objective short, and notes are there. ISRG, that's Intuitive Surgical, broke down below this ascending price channel, the two white lines. We had this yellow uptrend line, which it had broken down even before that with a very bearish big red candle. That's confirmation of the breakdown. You have this flagging action. I mean, just everything you want to see on a short trade. Let's fast forward to today, ISRG, see how it looks both for a current short and what it did back then. So you really have to zoom in because the stock has had such an advance. So if I take this chart and go back here, okay, this was the trade. This is where I was highlighting it first in the video before it even broke down. So you could have had it easily positioned up here in anticipation of what, at the time appeared to me to be an imminent breakdown in the sector and most of these stocks that I covered. So you would have caught that move, flagged there. You had another opportunity to add or initiate a position, broke down, put in a larger flagging type action. That flag played out. You can see this is a move down. There's a flagpole. If you take the impulsive move down, that's your flagpole. There's a bear flag pattern, and that one played out almost exactly as that pattern would project. You just simply, again, take the length of the flagpole, add it to the top of the bear flag, and there's your measured target. That fell a little shy of my second target on that flag breakdown, but then the stock continued lower without even ever getting close to being stopped out. Hit that second target to the penny pretty much if you look at it, and then reverse from there. So at the time I had only listed this as a potential third target. I didn't see enough evidence in the charts to extend that. So there's one that played out, almost to the penny, and again reversed right at the final target. And now it's come full circle. It's had a hell of an uptrend, pardon my French, heck of an uptrend. And this is a very well-defined downtrend line. So here's one that has yet to break down. You don't have a sell signal yet until it breaks down, so you might want to hold off. From the look of the PPO and the RSI, there is certainly divergence, but this stock could turn up here. In other words, let me draw it out for you. And when I see that flattening out type, I like separation in my divergence. It's just my preference to see. Sometimes these flat line divergences don't play out very well. Let me change the color on this and make that. This will stand out here. Okay, what I could see here on this one would be one more thrust up within the wedge. And before I get to that, a breakdown is a breakdown. So if it breaks down, forget about this scenario. We're not going to get that thrust. If it breaks down, that's a sell signal. But if we do bounce here because we're at support, one more thrust up, then a breakdown, and that would give us divergence that looks like this. You'd see the RSI come up there. We'd have clean negative divergence, like my preferred type, and I see a move all the way down here to about the $800 area. So if we broke down in the sector, like I said, it looks quite bearish. I don't know if ISRG has in it another thrust up, especially if the sector starts to break down. A lot of stocks already have, some haven't yet. But from this point here, and that's a support level, I'll just give you the number as I'm doing this video, 922, call it. And if it comes down, breaks below 922, you're talking a move down. I think it'd come at least towards the top of this gap. That's a drop of about 14% or so. And if it gets another thrust up higher, breaks at a higher level, obviously that's a bigger gain. So there's ISRG. Okay, I only had, that's it. One more to cover, BSX. Boston Scientific Corp. Okay, back then I point out bearish rising wedge with negative divergences. This one had already broken down, but again, it was covered earlier in the video, probably when it was in this consolidation zone right here, this support zone between these two lines. And then a week later updated it that it continues to drift lower following the recent breakdown, highlighted this scenario, move down here, a little bounce, and then a move down to backfill the gap, and that would be it. That was my expected target. Let's see where that one's at. I haven't even looked at BSX lately. BSX, all right. And that's where we were back then. If you recall in the video, in the screenshot from the video we just looked at, we were back here at the time. We had just broken down. I had highlighted a scenario that we continued to drift lower, and that was right about this point. So it gave you, again, you still had a very objective short entry. I had this scenario drawn out almost exactly what happened. I had it going down here, hitting T1, which it did hit, followed by a reaction. There's your reaction. I mean, we can draw this out. Um, this was a scenario I had, a bounce, and then a move down to T2 being my final target. And again, you can see with almost impunity, we had an intraday pierce. You see that little wick, that candlestick tail, but we closed above it. So we hit that final target. We backfilled that gap, and that was the end of the run. So again, this is technical analysis. I mean, these are posts that were made in the past and were spot on. Nobody wants to shorten a bull market. Most people don't, but that's where you find some of the best opportunities. So BSX has now come full circle once again. It's rallied. It hit that target, and had quite a bounce from there since looks like November of last year. Has started working its way up within this ascending price channel. These two lines here. Prices are currently testing the bottom of the channel. So as I said, there's some names in this sector that have broken down and some that haven't. BSX has yet to break down. PPO's pointed lower, that's bearish, and we're about to get that crossover. If you guys have followed me for any bit of time, you know I love these zero line crosses with the 9 EMA, the PPO signal line. When it's below, as it was right here, I'm talking the white line, the trend is bearish, and you can see that was the case there. When it's above, as it was all throughout this point, the trend is bullish, as you can see it was there. And again, below, bearish. Very simple but effective trend indicator. So what does that do? You can see above, it's been above this whole time in an uptrend. That will help confirm two things. You get a breakdown here, that's your sell signal, and the trend indicator will help to confirm. So don't be overly concerned with the fact the stock is oversold, because during a downtrend, oversold can either become more oversold or stay oversold for an extended period of time, as is often the case. Just as during an uptrend, overbought can become more overbought and stay overbought for some period of time. So there's a potential setup. Again, I just really haven't had the time yet today to go through these stocks and give you some price targets, which I will do, and I'll also go through my favorites, but we'll jump back to IHI real quick now. So there's IHI. I started with this chart. I showed you everything that stands out to me. I could also draw that divergent line here. Double negative divergence, just like last time. Again, this is almost identical to back there in late fall of 2016. And there's your breakdown. You can see we're just starting to crack through there. Trend indicator still bullish at this time, but this would be a minimum drop on IHI down here. My minimum swing target down to the 152.50-ish area, and that's a drop of about 7%. And I'll more than likely add some additional targets. But again, it depends a lot on how this sector looks at the time and how these individual components look. As I always say, I don't trade any one ETF or sector in a vacuum. I look at the top components. I'm only going to go through just a few here, and we'll wrap this video up. I'll just go through the top 5 or so because I sort my watch list usually by market capitalization. That's typically the bigger the market cap is, the higher weighting that stock will have in that sector. So here's MDT Medtronic, very big medical device maker, and there's the former targets that were hit back then. You can see at this point in time we have a bearish rising wedge with negative divergence down here. This one's already started to play out. You also have a double top high. Now that could be a much more significant technical development longer term. We'd really have to jump back, and let me do that as I'm talking to you guys. I haven't had a time to really dig down in this into these charts so much before doing this video. Yeah, what we're seeing here could be a potential double top pattern, which would have longer term bearish implications. Top number 1, top number 2, and I'm not seeing a very well defined base or bottom, but I would say that's it actually looks pretty good there. There was a brief split there. So if MDT comes all the way down here to the bottom of this pattern, and then ultimately goes on to break below, we'd probably get a reaction. This pattern would measure quite a bit lower, somewhere around there. It's basically the distance of the double top basing, the base on the double top pattern to the highs. You add that to where it breaks down. So let's not get ahead of ourselves. We'll watch that one We'll see how the charts develop. A couple more, and then I'll wrap up here. ABT, Abbott Labs. Here's another huge company. Negative divergence, rising wedge. You can see the divergent top here, double divergence, and it's sitting right on this trend line. The price action has been impulsive recently, and if that one breaks, I don't see, I mean, there's always going to be little counter trend rallies along the way, but I see that one coming all the way down here, and that's about the $46 level, which constitutes a drop of about 6.5% from current levels. So not bad, not one of the biggest gain potentials, but 6%, especially in short order, if the sector breaks down, that could get there quickly. TMO, this is about the third largest by market cap. Thermo Fisher Scientific, here's an uptrend line, negative divergence, you can see down here. We're at support, so we need to see on this one, for confirmation, a break of both this uptrend line as well as this horizontal price support level around 170. Doing that, you'd have what I call, break of double or dual intersecting support levels, and that would be a pretty high probability sell signal, and that one would bring us down at least to this level here. That's a little north of 160, probably about 161 or so, and that would give us a drop of about, same thing. So right now, we'll call it, that's about 5.5%. Call it about a 6% drop overall in most of these stocks. Minimum targets, DHR, that's Danaher Corp. And you can see this one has a very nice support level here. You can see it's been dancing along. You had reactions back here, reactions all along here. So break of that support line. Let me try to use my white shading tool. There you go. We need to see a definitive break. When I say definitive, see, we've limped below. That wasn't impulsive. We move back up. We're dancing on the line, but it is below there. And if it continues down, especially if it takes out the recent lows from Friday, it looks like that one's going to come all the way down to this level here, and that's about 76.25 or so, 76.30, and that'd be good for, again, about almost a 7% drop there. And we'll wrap up here with Stryker. Stryker, just a beautiful pattern. This one is one of my favorites. Here's a very nice bearish rising wedge pattern. You can see it here, just as we had back here. And back at that point in time, we had a bearish rising wedge pattern with divergence, negative divergence. You can see it here. Pretty much flat on the PPO as well as the RSI versus prices making a higher high. And that was good for a drop from that point down about 13.5%. So now we have a rising wedge, very steep negative divergence. All you need is a break of this trend line. I'll set an alert right now just in case I forget to do so later on. And yeah, I can tell you this one's probably headed down to about this level. You can see on the volume at price histogram there's a thin zone there. There'll be some stops along the way, meaning counter trend reactions. But that's from current levels. This one looks so good. I might even take a starter position here at the top of the wedge. That's probably good for about a 12.5% drop if it gets down there. But if it hits that first target or that second target, you're still good for about a 10% drop from current levels. So I'll wrap it up here. So anyways, that's the one of the sectors that stand out on the short side right now, IHI, medical devices. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.